All right, let's just get right into it. The AI revolution is here, and it is moving at a speed that's, well, it's completely reshaping our world. We're all seeing the incredible software, the models that can do things we never thought possible, and of course, those soaring stock prices. But here's the thing. Underneath all that digital magic, there's a physical reality, a hidden world of concrete, copper, and cooling systems that could bring this entire gold rush to a screeching halt. So today, we're going to look past the code and into the guts of this thing, the infrastructure that's going to decide who really wins and who loses in the age of AI. And this quote right here, this is the central, unavoidable truth of everything we're talking about. It's a really stark warning that all the digital genius, all the trillions of dollars pouring into chips and software, it's all basically worthless if you can't turn it on. We're building this digital skyscraper on a power grid that was designed for the last century, and you can literally hear the foundations cracking. We're staring down the barrel of a decade-long energy deficit that could make the gas lines of the 1970s feel like a tiny little hiccup. But before we dig into the crisis, we have to appreciate the sheer scale of this boom. I mean, the numbers are almost hard to believe, but they tell a story of investment and growth that's, well, it's completely off the charts. So let's put some real context around this gold rush. So what is this number? For a brief shining moment this year, this was the market cap of NVIDIA. That made it the most valuable company on the entire planet. Now think about that. Not a software company, not a social media giant, but the company making the physical chips, the actual picks and shovels for the AI revolution. It was this massive vote of confidence from the market, basically signaling that the hardware build-out is the story of our time. And that hardware, it's being bought up at an absolutely staggering rate. This number here, this is the projected worldwide spending on AI for the year 2026 alone. That is a 44% jump from the year before. And this isn't some speculative VC hype. This is real money from the world's biggest companies pouring into building real AI capabilities. The train has left the station, and it is picking up speed. All that spending is creating absolutely mind-blowing revenue for the big AI labs. Just look at these figures. OpenAI, the ChatGPT folks, they're already on track for $13 billion a year. Their main rival, Anthropic, is at $7 billion. Heck, even a newcomer like Elon Musk's xAI hit $500 million almost out of the gate. These aren't research projects anymore. They're commercial juggernauts, and they're really just getting warmed up. And here it is. This is the question that changes everything. For all the talk about the cloud and wireless data, the AI revolution is deeply, fundamentally, physically real. It needs buildings, it needs power plants, it needs mountains and mountains of raw materials. So what happens when our ambition outpaces our actual physical infrastructure? And that brings us right to the core of this whole explainer, the insane, almost unbelievable amount of electricity this technology eats for breakfast. We're not just talking about a little bump in demand here. This is a structural, fundamental shift in global power consumption that our current grid, well, it's just not built to handle, not even close. Okay, just let this sink in for a second. One company, OpenAI, they are planning a supercomputer that would need the power output of 26 nuclear power plants. Just to give you some perspective, a single one of those plants can power nearly 900,000 homes. And we're talking about one player here. Microsoft is already looking into its own nuclear power projects just to feed its AI habit. The demand is simply out of control. So what's the price tag to build out the infrastructure for all this? Well, according to McKinsey, the world needs to spend $6.7 trillion on data center infrastructure by 2030. That number is so big, it's almost meaningless, right? Okay, so think of it this way. America's entire capital expenditure budget, that's across every single industry for 2024, was around $8.3 trillion. A single little subsector of tech is about to eat up a fifth of that, just on its own. So here's the crucial point. We're creating this massive financial risk. It's called stranded capital. Just imagine a company spending billions of dollars on NVIDIA's latest and greatest chips, building a beautiful, state-of-the-art data center, and then they find out there's no electricity to plug it into. Those chips, that entire building, they become stranded, useless. This isn't some far-off problem, it's a very real danger to the trillions being bet on the AI space right now. Right about now, you're probably thinking, okay, I get it, we need more power. So why don't we just build more power plants? The problem is that the digital world moves at the speed of light, but the physical world, it moves at the speed of concrete, steel, and government paperwork. And this just illustrates the disconnect perfectly. An AI company needs power today for its shiny new multi-billion-dollar data center. But if you want to build a new nuclear plant, one of the few sources that gives you that 24/7 carbon-free power, you are looking at a 10-year timeline. And that's if you're lucky. The application review alone can take 5 years. Then you have to build the thing. AI models are basically obsolete in 18 months. Our grid takes a decade to upgrade. The timelines aren't even in the same universe. And it's not just about the power plants. The bottleneck is the entire physical supply chain. We're seeing shortages in really complex stuff like advanced chip packaging and the high bandwidth memory that these things need. But we also need the boring stuff, the stuff that's absolutely essential. Transformers, cooling systems to stop these places from melting, and miles and miles and miles of copper wiring. Analysts are already warning about a massive copper gap that's about to open up. Every single one of these things is a potential choke point. So let's pivot to the solution and how this all shapes up as an investment thesis. I mean, if the biggest problem for the AI gold rush is a lack of picks and shovels, then maybe the smartest play isn't buying the gold miners, but the companies that sell the gear. The opportunity isn't just in the AI models, it's in the physical stuff that makes them possible in the first place. This quote from a Swedish investor report just hits the nail on the head. It sums it all up perfectly. It really doesn't matter if the electricity comes from solar, nuclear, or natural gas. It doesn't matter who wins the AI wars. They all need the grid. They all need the transformers and the pipes and the power lines. There is no substitute for this infrastructure, which gives the companies that build it just incredible long-term pricing power. Now this right here, this is what we call the brutal truth. A lot of investors hear AI needs power, and they immediately go buy green energy ETFs. But here's the problem. A lot of those funds are packed with subsidized solar. And look, solar is great, but it's intermittent. The sun goes down. Data centers need rock-solid 24/7, 365 power. The real bottleneck, and maybe the real opportunity, isn't just in making power. It's in grid reliability. The transformers, the copper, the cooling systems, the stuff that makes the grid stable enough to handle these insane loads. So what does that look like in practice? Well, here are just a few examples of the kinds of companies that are absolutely critical to this build-out. You've got ETFs like POWR, which is just focused on U.S. power infrastructure. You've companies like Vertiv and Modine that specialize in the super important job of cooling these facilities. And then you've companies like EMCOR. They're the ones physically building and wiring these massive data centers. They are the essential and often totally overlooked enablers of this whole revolution. Okay, this brings us to the final and maybe the most important part of the whole story, because this isn't just about corporate profits or investment returns anymore. As we head toward 2026, this race for power is quickly becoming a matter of national security and, frankly, geopolitical dominance. This is the year this whole thing moves from an industrial problem to a state-level emergency. And the crucial point here is the rise of this really powerful idea, sovereign AI. Nations are waking up and realizing they absolutely cannot depend on other countries for the digital infrastructure that's going to run their economies, their militaries, and their entire societies. Controlling your own data, your own models, and, critically, your own power supply is becoming a non-negotiable for survival and influence on the world stage. And you can see this race playing out right now, all across the globe. Saudi Arabia has launched a $100 billion initiative to build its own AI ecosystem. India is pushing super hard to develop its own sovereign capabilities. And of course, the main event is the rivalry between the US and China, who are locked in this fierce competition to control the critical supply chains and export their tech to the rest of the world. And this slide right here, this just underscores the huge national security risk we're talking about. Right now, China produces 98% of the world's gallium and 60% of its germanium. Now, you've probably never heard of those, but they are absolutely essential for making high-end chips and advanced military gear. Control over these physical rocks and minerals could translate directly into geopolitical power in the AI age. And so, we'll end with this question. For years, we all thought this competition was about who had the best algorithms and the smartest data scientists. But as we move into this next phase, it's becoming terrifyingly clear that the physical world still matters, a lot. The ultimate winner in this race might not be the nation with the best code, but the one with the power, the pipes, and the infrastructure to actually run it all.